Hey everybody, this is Richard. So in this video I'm going to be showing you a couple trades that happened today. And today is the 29th of December. And so like I said, we're going to see two trades, and basically what we'll see is the Emerald Long is going to get into a trade. And right here is about when it triggers. So there you see that it bought. We got a fill of 3853.5. And then up here in this is called the trade matrix, and this gives you the profit or loss per unit traded, so in dollar amount. So right now it's around, I don't know, $600 per unit is what the profit is on it. But you'll see that moving throughout the day. So this is one trade that we got into, and this trade was seen on Paladin and also Noble. And what it'll do is it'll throw out a 50-point stop, and then it'll hold until it decides to exit. Right now, it believes that the market is in a strong up state, and so that's why it got into the trade, and that's why it's holding right now. But we'll let it run here and kind of speed up the video. But what you'll see next is going to be an options trade trigger, and this one traded on Paladin and Noble as well. So both Paladin and Noble saw both of these trades. And right here is where you see it trigger, and you can't really see the text very well, but what that says is that we sold the 25 put vertical, we sold the 38.75 put, and then we bought the 38.50 put. Now the volatility had shrunk a bit, and so we collected 5 points of premium on this trade, or about $250. And what we want is for the S&P to close above 38.75. Now, if it closes below 38.70, then we'll take a loss. But so that 5 points that we collect in premium is a little bit of a buffer, so that even if we're wrong by a couple points, we can still be profitable. But this is the first option trade that triggered today, and actually it's the only one that triggered. Some days we'll have one trigger, some day we might have 0 trigger, other days we could have up to 8 trigger, believe it or not. We only had one today. But again, I'll fast forward the video so that you can see how we close. But keep in mind that past performance is not indicative of future performance, and there's definitely risk in trading futures and options. This isn't for everyone. So with that out of the way, though, that brief disclaimer, let me go ahead and fast forward the video, and you'll kind of see where we close at. Okay, so right here you see the Emerald Long trade that we're in get out of the trade. So and kind of what happens is the algorithm decides that it's not going to be in a strong up state anymore, and so when that happens, if it's in a long trade, it'll get out of that trade, and that's exactly what happened here. So we ended up selling at 38.77.5. We bought at 38.53.5, so we had about a 24-point gain. Now again, each point is $50, so the total profit and loss on this trade was $1,200 per unit traded. So if you're on Noble, that's per 40,000 traded, and if you're on Paladin, that's per 60,000 traded. Now the broker commission can vary, but it's roughly about $6.50 per round trip trade all in, and so it's a very small portion of that 1,200 that was gained. So this was a great day trade. We got in as the market was rallying and breaking out, and then we got out at this point. Now we'll see how the market closes. But and as time goes on, you'll see that the market does roll over. And again, I know it's running kind of fast here, but you'll see that the market does sell off a bit. And then as the market closes, it does close below where we got out. And so the algorithm did do the right thing by getting out a little bit early here. Now again, this is fully automated, so I didn't make that decision. This Emerald algorithm, what it does is it's looking for different changes to occur, and when the right change happens, it'll get out of the trade. Okay, so here we see the equity markets close for the day at 4 p.m. Eastern Standard, and we do see that the options, the S&P futures options, expire at the same time. So the price that they expired at was at about roughly at about 38.72. So the options expired in the money. That is the short put expired in the money. And so what that means is we get assigned a long S&P contract at that short strike price, which is 38.75. Now remember, this happens automatically. You don't have to understand this. I'm just showing it so that you can continue to learn how these work. But we were short the 38.75 put, so that means we get assigned an S&P contract at 38.75. Now the market closed below that, as this shows. And so as the market closes, the broker, what they'll do is they sell a contract to offset the long S&P that will be assigned when the market closes and it gets assigned. And so when we sold it, we sold it at 3872.75. But remember, we did collect 5 points of premium when we sold the option. So what this means is that our total profit, instead of being the full 5 points, it's basically 3872.75 where we sold it at, minus 3875 where it got assigned, and then we add to that 5.0 points. And so we get 2.75 S&P points, which is the final profit. Now each point is $50. So we had a gain of about $137. Now, after commission that the broker charges, that drops to about $123. And so that's that trade. But what I want you to pick up on is, notice how the market closed below where the market was when we initiated this long position, yet we're still profitable. And so that's why these spread trades can be really good to trade, is that it all depends on how much premium we collect, but it gives us a bit of a buffer. And so remember when I've said, if you watch the other videos, that we do the trade when we have about a 57% win rate. Remember how I mentioned that doing a put spread increases that win rate by about 10%, maybe a little bit more? Well, this is an example of that happening. If we just bought the futures instead of the option, then we would have bought it at about 38.75 and we would have sold it at 38.72.75. So we would have had about a 2.25 point loss, or about a $100 loss. But instead of a $100 loss, we actually had about a $100 gain. And so that's one reason why we do these spreads. The other reason is, notice we didn't have to have a stop because our max loss is defined. If we were just long the futures, we would have had to have a stop. And who knows, we might have got stopped out when the market was kind of going up and down. Now today we probably wouldn't have, but if the market was more volatile, then we very well might have. So those are the advantages of the put spreads. But so when you look at the day and close it out, we had a gain of about $123 on the first option. Now that I've taken out the commission that the broker charges. Add to that the $1,193 that we made on the Emerald Long. And again, I took out about $7 for commission on that, even though it's actually a little bit less. And that gives us a total gain for the day of $1,316 per unit traded. Now, what's a unit? So Noble, it trades at $40,000 unit sizes, and Paladin trades at $60,000 unit sizes. So if you were trading Paladin today, then you would have seen a gain of about $1,300 per 60K in your account, which is about a 2% gain. And so not bad. Now just remember that past performance is not indicative of future performance. And remember that trading futures involves substantial risk of loss, not appropriate for all investors. And remember that I'm not a CTA. I offer the algorithms under a letter of direction, which means I don't give any personal advice and I don't directly control the account. But these are fully automated trading system that trades with one of these NFA registered brokers. Paladin trades 12 different strategies, and what you saw today is 2 of them trading. The other 10, by the way, just didn't trigger. One of them is the momentum S&P. The other 2 are other day trade algorithms. We have a day trade short Emerald that's similar to the one that triggered today, only it goes short. We also have a day trade long, which didn't trigger. But then so that's four algorithms. The other 8 are in the options algo, and that's the one in the top right. And we only had one. Again, we can have up to 8 of those. So that's really all I have to say about today. But thank you for watching. It was actually a great day. The market was up, but we were able to capture some pretty nice gains. So thank you for watching and have a great day. Bye-bye.